So now we do quite a few. We do have about 600 clients with the Spendthrift Trust, and do probably over the 28 years, I'm estimating we have done somewhere around 8,000 of these tax returns of these Spendthrift Trusts. Not a single one been audited.
Out of 8,000 and out of that long,
not a single one audited, not a single one.
Do you always feel like you should knock on wood or something when you say
no,
that?
Because again, the special particulars of this type of trust gives it a very unique, I think even a very unique aspect, even with the Internal Revenue Service. The IRS knows what the Spendthrift Trust is. When the IRS was formed, many very, very wealthy, affluent people had some influence, I'm sure. I don't know for fact, but I'm sure they did. They had some influence in the IRS and wrote into the IRS code what we are able to use today to help us to defer some of the taxes using the Spendthrift Trust as a tax vehicle. So the IRS has an idea of knowing. Supreme Court has ruled in numerous cases that Spendthrift Trust is untouchable by the legislature. And lo and behold, the IRS is legislative body. So I think the IRS kind of knows that the Spendthrift Trust, which is contract law, not legislative law, is going to be very hard unless something is done illegally or fraudulently within the trust. It's going to be extremely difficult for the IRS even to challenge it. Now, if we do something wrong in the trust, the IRS is more than welcome, to challenge anything that's done incorrectly within the trust. But basically, the trust is untouchable by the legislator. And the Supreme Court has agreed with that and passed rulings just stating that exact same thing.
How? Okay. Which, we're this trust. Let's back up for a second. We talked about it before offline when we got out here and just kind of visiting. On a trust like this, the first reaction that people give you when they hear about it is what is it? What is usually the first reaction?
The first reaction I get is it's either this is a scam or this is too good to be true, and they don't want to touch it. And I find that is initial problem with a lot of other accountants, other attorneys around the country who maybe never worked with a Spendthrift Trust. But the thing is, and a lot of it is because of the characteristic of the Spendthrift Trust. Spendthrift Trust is nothing new. Spendthrift Trust was developed in, I think it was in 1533 in England. 1533 was when the Spendthrift Trust was actually developed. So some lawyers back then, the King of England was actually making off with property from individuals. So some of the very, very affluent aristocrats back those days had some good attorneys who wrote up a Spendthrift Trust to protect their assets so they couldn't be touched by the King of England. So, and this is the same trust we're using today, the exact same principle that this trust is using today. It's 100% asset protection for everybody that uses it. But again, it was held by very, very affluent, very wealthy, affluent people in Europe. When our founding fathers came here, it was brought here to this country. You look at some of the articles within the Constitution, it appears apparent to me anyways that maybe even some of our founding fathers either had or knew of the Spendthrift Trust and built some of the principles of the Spendthrift Trust into our Constitution. So it's there based on contract law. Constitution holds up contract law. The Supreme Court has held up contract law. So it's been around, but it's been very closely held by very, very affluent, very wealthy people for, like I say, coming up almost 500 years now.
Yeah.
So it's only been recently that there are several attorneys around the country, law firms around the country that say, wait a minute, some of these very wealthy people have this thing. Why can't others have it? So they've written this trust and copyrighted it and able now to distribute it to other individuals in the country. So now we're slowly finding this increasing knowledge of it being available to other people and people wanting it and realizing what it can do, and they can add it to their particular portfolio so they can not only protect their assets, but now we have a vehicle, Internal Revenue Code, that gives us the ability to defer taxes on certain passive income. So we now can defer some taxes. So there's a tax savings vehicle with the trust as well as an asset protection vehicle with the trust. So it's an excellent vehicle that probably should be used by everybody, but not everybody knows about it or can know about it. I can only talk to so many people. Your video here can only get out shown to so many people. That's all that's basically going to know about this trust unless friends tell friends. The same way I built it. My business was from one friend telling another and passing it on, and gradually it grows and expands.
Yeah. What? Okay. When you know that their first reaction when they hear about this trust is disbelief. If we're going to just put a real easy umbrella over it, we got a lot of different tentacles, just disbelief.
Yeah.
Let's start with that. How, I always take them through what I walked through to get to this point of confidence that I'm at. Because I'm at this point of confidence. But do me a favor, let's hear it through your shoes.
Yeah.
So you said your client comes to give you a tax return for a spendthrift trust. You go do your research, you find out some about it. You start becoming aware of the power of a spendthrift trust, and then you get introduced to this trust. Walk me through the steps of Richard Stimson in your mind, what grew your confidence and made you go, it is what it is.
Yeah.
It's that good.
Well, first of all, I started right out with a voluminous amount of information that's already available out there. We have legal opinions from some very good law firms around the country that have reviewed the Spendthrift Trust and state in their opinion letters and just what the trust can do and can't do. We have that. Also have, in which I found, and several people presented to me too, the law firm provided me the whole list of court cases that have been held up by the Supreme Court. We got the excerpts from the Constitution that back up what the trust can do as far as contract law is concerned and holds up what the trust can actually do. And so with all of that, I looked at it's pretty powerful in itself if it's applied correctly. And of course, like anything today, a lot of it's based on interpretation as to how, I interpret it or how somebody else or another attorney or another accountant may want to interpret it. But I look at it as what has been done in the past. So I look at what the trust can do, what the IRS says the trust can do, and we try to follow that to the letter. So every tax return I submit, I put the statement in there as to exactly what type of trust it is, so there's no misunderstanding that we're talking about this type of spendthrift trust. And also I put in there a statement when we declare the extraordinary dividends, and according to IRC 643, that I put a statement in there that actually verbiage, just the exact wording out of the Internal Revenue Code. I put that as a statement on the tax return too. And I think some of that may have a good reason why none of these returns so far have been audited, is because I spell out what it is and I don't omit any income and no expenses. We report every single thing. So any expense that the individual has in their trust is reported on the tax return. All income, every penny of income, is reported in the categories that the income actually is. So there's nothing hidden on the tax return. The financials back up the tax return, so everything matches right down the line. So even before I had the Spendthrift Trust, I did normal business accounts, and I had a fairly good success with audit returns for my regular business clients because we documented every single thing. I conducted several audits right on my kitchen table here with an IRS auditor and a couple of my business clients, and they come in and I could immediately tell when I looked at the table and everything was in perfect stacks and all lined up and everything was exactly the order that they wanted and everything else. And the poor guy looked at it like that and took 5 minutes, went through it and left, and then got a letter a week later that says no change. So it's a matter of making sure that you're not hiding anything, you're not trying to deceive anybody or do anything. And we don't do that with the trust either.
Okay, because you don't have to.
Don't have to. No,
and
there's no reason to.
We were walking around your property and we were talking earlier, and you were talking about how there's some tax deductions you haven't even used.
No, it's just
because you don't have to because of this trust. Because you own one, yes?
That's right. I own two of these trusts. I have a business trust. My business is in a business trust, and then our family is in a family trust, of which the family trust is a beneficiary of the business trust. So yes, so we use both these. When I was first introduced to the Spendthrift Trust, I didn't have one for, it was over 12 years when I got introduced to this particular one right now. And then I liked it so well when I read it and saw it, I said, I want those. So I bought two of the trusts myself.
How'd you get introduced to this one? So you started down the
same as it was with my original client. They were having trouble. The law firm that was actually distributing and selling these trusts was having some problems finding an accountant that even knew anything about a spendthrift trust. Well, I've been doing spendthrift trust tax returns for over 10 years by that time. And so they, through some word of mouth somewheres, one of their individuals, I had been doing their tax return, and they said, yeah, Richard Stimson over here knows how to do this spendthrift trust tax return. So I get a call one day, and I go and meet him at the restaurant up here in Grapevine, and we talked about it, and it just grew from there. So yeah, so
that's how it all began.
Yeah, their story is like I've heard a dozen times, and a lot of my clients have come to me the same way. They say, we haven't even filed a tax return on this trust in 3 years because we can't find anybody that can do the tax return for it. My own accountant says, I don't know what that is. I can't do that tax return. And so somehow they get my name. I don't advertise. I haven't advertised since day one when I started my business. I just say that I advertised, I think, the first month when I started my business, but everything's been word of mouth since then. Yeah. So one client tells another. So I started with one spendthrift trust client. He told somebody else. Obviously, somebody told the law firm that I knew how to do these things. So they came to me, and then they started sending clients to me. So it's just grown from there.
So you've got this unique tool. You've got all this background in accounting. You have your military background, you get a triple degree. One of those is accounting. You decide to pursue accounting as out of those three, you decided against computer science, and you got business and accounting go together.
Yeah, I mean, then it was,
you know, it really, that's my dad, and you are a lot alike. His degree was in accounting. He's always been an entrepreneur. How much that helps out, you know, and all the businesses we've done together, I'm very grateful for his degree in accounting. He's been a lifesaver for me. But you pursue this accounting side, you do it successfully for a while, you run across a spendthrift trust. Your ambition and your willingness to tackle something says, yeah, I can do something, and then you figure out how to do it. That's part of business,
if that
right?
first client had known, I didn't even know what a spendthrift trust was, he'd have been wringing his hands somewhere saying, can this guy really do this return? And so, yeah, we figured it out, and we did it for him, and we've been doing them ever since.
And then, you know, you built a machine.
Yeah.
And you got a heck of a mousetrap.
Built the program and stuff, and to do it all. And so we do it all, right from this office right here. Don't even have to hire out anything out.
and you know, really, Richard, I've noticed how key the accountant role is in a trust like this. If you file it poorly, if you use funds incorrectly, it can get you in trouble.
Very much so. Yeah.
Right?
That's true. Probably the largest part of my business time is spent during tax season is doing just that. I have to review the data that my clients send me. And a lot of times without fail, I have to correct some things that they're doing. And I call them or email them, say, wait a minute, something's wrong here. One client sent me a list of all his expenses, and lo and behold, there were about 12 expenses on there to McDonald's out of a spendthrift trust. That personal expenses are not an authorized expense of the trust. So eating out at McDonald's is not an authorized expense. So unless it was for the trust business. And he was doing some real estate business at the time. And I tried to ask him, I said, wait a minute, are you really taking real estate clients to McDonald's? And he had to say, no, it's me and my wife. You know, I said, well, you can't deduct that in the trust. So we actually look at those returns, look at the data, and then correct things like that and catch those errors before they get on the tax return and then challenge sometime down the road. So try to do that.
So in that example, the McDonald's charges from that gentleman or that family's trust would now be categorized as income and taken away from their demand note?
We do it that way. It's a personal expense. So each one of my clients, because of the way we move assets into the trust, since it has to be a legal sale of an asset into the trust, there has to be compensation for that sale. So instead of the trust paying dollars for the actual asset, we issue a demand note, a legal note for it in payment for the asset that is sold to the trust. So they hold a demand note, a liability within the trust. So they can use that demand note, the principal portion of that demand note, they can draw down to pay for some of those personal expenses. So when I see expenses like that are unauthorized, or there are other things that I catch that don't look like they're really trust expenses, we'll deduct it from their personal account, their demand note within the trust. So we don't show that as an actual expense on the tax return.
So, and you know, we joked about it before we started, and for our viewers, bear with us because we're going to jump around. We got some rabbit trails that we're probably going to go down a little bit, right? Because we both think
we
that
do
way.
that. Yeah.
Let's talk about how the actual trust works. It's a 5-part trust.
5-part trust, yes. So yes.
So let's assume for conversation's sake, Richard, that I was just introduced to you by Richard, my contact there at the trust company. And he introduced me, and he really didn't tell me much about the trust. I may have heard it from a buddy. Your buddy's one of your clients, and he says, you really got to call Richard and find out about this trust. Tell me about it.
Yeah.
Teach me about the trust. What is it? Act like I know nothing.
Well, that could take some time. I actually have put together 2 PowerPoint presentations that we do exactly that with for the clients. So in those PowerPoint presentations, we go through the basic one is 2-part. So the first part of that presentation goes through the basic understanding of the